Hi everyone, good evening. I hope everybody is doing fine, although the markets are not fine as of today. But again, in times of uncertainty, I always try to bring the best in the financial market. So today also we are going to have a short session with Ritesh Jain sir, and definitely he will help you understand what's happening across globally. He's an expert in global macros. So he will try to address the apprehensions best in his capacity. So meanwhile, I request our audience, they can certainly share the link with more people so that more people can benefit from his experience. And this is going to be a short session, so I fear I won't be able to take the questions, but broadly, all the questions which are there in time of uncertainty, we try to address in whatever time is available. Hi, sir. Am I audible, sir?
Am I audible?
Yes, you are. Welcome again,
Okay.
sir.
Yeah.
So,
Thank you.
so guys, without further ado, let me take a moment to quickly introduce sir. So today we have Ritesh Jain sir, and we recently had a very interesting and exhaustive session with him, and the link to which is pinned to this spaces. So certainly after this session, you guys can go through that if not already. So sir is founder at Pine Tree Macro and IGEN, and sir has got over 20 plus years of rich market experience, and he's a global macro expert. And today, the most talked about topic will be taking that topic with sir. There is a lot of uncertainty going around unwinding of positions in yen carry trade and the recessionary fears in US and the VIX movements in India. So broadly, I would request sir to take a opening note and address these questions. And if after that there would be few minutes, we'll take further questions, sir. Over to you.
Great. Thanks, Prince. Welcome, everybody. So, yen carry trade, everybody has heard about it. I've actually done a part of yen carry trade I've done when I was in banking, when I started my career in banking and FX side. So first I need to explain you in simple terms how it happens, because I have done some transactions, so I'll explain you the transactions. That was 20 years back. At the Indian interest rates were 10%. I'm just giving an example kind of thing. Indian interest rates were 10%. You could borrow a 5-year money in India at 10%, but you could borrow the same money in JPY in 1%. So what a lot of corporates used to do, and today India's $35 billion of FX loans are in JPY. Okay, so what corporates used to do, they used to take loans in INR and they used to swap it in JPY. What does that mean? That instead of paying 10% interest rate, you were actually paying 1% interest rate, and you only have to worry about the currency movement of JPY INR. JPY INR is JPY dollar and dollar INR. So JPY INR. Okay. So let's say a company takes 100 crores rupees of loan. Okay. If it is in INR, it will pay they will have to pay 10 crores of interest. In JPY, they will have to pay 1 crore of interest. So in their bottom line, directly, you get a 9 crore of, a reduction in interest expense. Okay. Till the time JPY is not appreciating against INR. So over a period of time, JPY continued to depreciate. More and more corporates started converting their INR loans into JPY loans. And they started showing much lower interest expense than what it should be. Not only this, at the end of the month, if JPY is depreciating instead of appreciating, as a bank, we had to give them a mark-to-market profit on the loan because JPY is lower, right? So they were making two things. They were making actually the profit on their JPY loan because value of JPY was falling. And they were also paying only 1% as the interest instead of 10%. Think about it. The guy would be the best CFO in the world if he continues to do it and JPY continues to depreciate. So you start small, then you've got, you've tasted this kind of JPY INR swap. You do more, and over a period of time, it becomes a very, very big thing. I also remember in around 2000 or 2001, when this trade reversed, where JPY suddenly, appreciated. I do not remember the reason why it happened at that point of time, but JPY suddenly appreciated. So at that point of time, that corporate had to give mark-to-market losses to us. And the losses were so big that one of the company's CFO had to resign. Now, are you able to understand it's such a lucrative thing that you can borrow in a depreciating currency at 0% or 0.5% and invest globally and not fear about the ramification because it has to depreciate because its interest rates are 0% and the carry trade keeps on building on itself. So you not only take loans, you actually borrow in yen free, don't hedge yen INR, and then invest globally and even leverage on top of that thing. So this is a giant carry trade which people talk about. Now there are some numbers out over there. It's a $20 trillion, $10 trillion number. I have no idea what it is. Okay. But it is obviously gigantic proportions because it's so lucrative to borrow in JPY. Now, something happened last week. They raised the rates by 25 basis points. They were at 0 to 0.1. Then they raised by another 25 basis points. Should that 25 basis point matter? No, actually it does not matter. The thing is, you had not told market, you had not prepared the market that it will rise by 25 basis points. At that point, and if you remember, till a month back, yen was depreciating towards 161 and Bank of Japan was intervening to support the yen. Now they are going to support the dollar. Okay. So they were supporting the yen till 2 months back. They raised the rates and suddenly people who were sitting on, kind of leverage positions had to sell some positions. When they had to sell their positions, again, I'll go back to my banking days where you have a risk manager who's actually becomes the most important person only on one day on the trading desk. Every other day, we don't care about the risk manager. Every day you get your VAR, value at risk report, which tells you how much position you can increase or reduce. As yen started appreciating, volatility starts rising because you have to sell what you can, not what you want. Okay. As volatility starts rising, VAR positions get cut. What does that mean? That if you were taking X risk yesterday, it will be X minus something today. And that means everybody on the desk has to sell to come back within the VAR limit. Again, if the volatility rises, your VAR limit is cut. Again, you have to cut the positions irrespective of the price of the asset. You sell what you can, not what you want. So this led to over the last between Thursday and Monday. This is where I believe most of the positions which were related to yen have got cleaned out. It has nothing to do with US recession risk. Why I'm talking about that, this is simply a correction and this is not 1987, this is not Lehman Brothers, this is not COVID. Reason? Because in every crash where the world is coming to kind of an end, is you have three conditions which needs to be fulfilled. One, DXY goes through the roof. Second, US bond yields fall. Third, US high yield spreads blow out. And the fourth, oil collapses. If you look at among all the four conditions, only one condition has been met. That one condition has been US bond yields are lower. DXY dollar index should have rallied, but DXY has not rallied. In fact, it is down. In fact, it was joke today morning that Chinese yuan was up 400 pips versus US dollar in Chinese trading today. Indian rupee did not touch 87 and 90. Indian rupee was well behaved today. Okay, yes, it was a little bit losses, but yes. I'm just looking at the high yield spread. You can just Google the high yield spread and I've actually put it on my Twitter. If you look at the yield, the high yield spreads are what it was on July 7th. It is now at the same price. And please look at the oil also. Actually, it's not that oil has collapsed. Oil is down. Yes, it had to be down. Okay, growth prospects are becoming weaker, but it is not collapsed at all. Look at it the brighter side. Lower DXY, lower US bond yield, lower oil. It is good for India growth. It is actually good for emerging market growth if it remains over here. So I do not believe, I believe the way things happened on the day we have election, not results, we had the, what do we call, one day before the election, where we got the polling data. And we had a circuit in the market down because everybody got the information at the same point of time. Democratization of information where you, me, Panwala, and everybody in the world has the information at the same point of time. They sell first, then they think about it. And whatever leverage position was there in the system at this VIX level, no leverage position can sustain. Forget leverage position. You will have to increase the cash level, and that is what has happened in my view. I believe unless bond spreads blow out from here towards the day end, which is possible, or DXY goes up from here again, which is possible towards the day end, I think it is a contained correction where the system is getting cleaned of its excesses, and it is nothing more than that. If you've been caught on the wrong side due to leverage, it happens. So this is the market. This is the kind of corrections. Be ready for these kind of corrections. You just saw it in India 2 months back. Why? Simply because of democratization of information. All of us have the information at the same point of time. We all react at the same point of time. So what you are seeing in the market is exactly the same thing. And I believe at this VIX level, because I have some data, at this VIX level, either you completely go and crash from here, or this VIX level tells me that market is fearful, massively fearful. And this is the only time, markets are the only thing where when people are fearful, they never buy anything. They always buy something when it is greedy. I would say, market is very, very fearful. I'm not saying go ahead and buy today, but I believe this is a correction which has happened. This is an orderly correction. Excesses has been cleaned out. Yes, it could take 2, 3, 4 days for system to get a little bit more clean. But I think by weekend, we would not be having this grave memories of what has happened in the market.
Thanks, Ritesh. So, Ritesh, on the liquidity side, obviously we cannot quantify basis 1 or 2 days, but going forward, how you see the liquidity position across the markets, if there is any sense on that?
If dollar index is down, liquidity is not a problem. That's what I'm saying. If dollar index instead of 100 so on Thursday it was kind of 105 in spite of not cutting the rates. Today it is 103 point something. If instead of 103 it was 108 or 110, which it is still possible can happen. If it was 108 and 110, then liquidity would have been a problem. What you are seeing today is not liquidity. What you are seeing today is strictly only margin, leverage. Okay, and you must read, for liquidity, you must read Michael Howell at Cross Border Capital. You can just, Google him. He's there on Twitter also. He has 70 indicators of global liquidity. He also writes the same thing. This is correction because rising dollar leads to liquidity contraction. Lower dollar leads to liquidity expansion.
Right. And obviously there would be, in such times, there would be many theories and discussing about wars and all doesn't make any sense. But do you buy this statement like it is happening so as to ensure an early rate cut by the US, or that is not a right statement as per your understanding?
So I had written few days back, even before the rate cut, that we should see rate cut on 31st July. Why? Not that I am having some kind of, that I know something more. No. US 2-year bond yield was screaming that Fed is too tight. They should cut the rates. You can look at the chart on my Twitter. I have posted it over there. US 2-year yield and Fed fund rate has the highest difference in the history. Fed fund rate has always without fail followed US 2-year yield. And US 2-year yield was saying on July 31st, guys, time to cut the rates. In fact, Chairman Powell actually said some of us wanted to cut the rates, but it's just the majority which prevailed upon us. US economy is not collapsing. The growth is coming off. In fact, today's Chinese data of PMI was quite strong. Okay. So in that kind of environment, yes, lower bond yields are already telling you that the liquidity is easy. They will cut the rates. There's no doubt they will cut the rates. The problem is if you tell them or you force them to cut the rates today, market will think that they're panicking. There is nothing to panic. It's just the leverage guys which are getting unwound.
Fair. And Ritesh, like people are also discussing the Berkshire Hathaway raising such a huge amount of cash. Is there any link or
yes, it's a sentiment.
How you basically?
It's a major sentiment negative that the guy who's been holding Apple for a long period of time is not only selling Apple, he sold BofA also. He's having the highest cash in the history. He knows now, obviously. On a given day when everything is already down, on that day if you get that kind of news, obviously it will affect the sentiment. Yes, US market is costly because I look at market capitalization to GDP. I put it on my monthly indicators and it is hugely overvalued. US markets are hugely overvalued. Okay. So that is possible. I do not believe that this is the time that we would be looking at, that collapse at this point of time, or, because bond yields are lower, inflation are lower, unless Japan makes another couple of mistakes. Okay. I think this is where you will feel in the next 2-3 days that things have settled down. Rate cut should come. War is inflationary. Inflation is good for assets, provided oil does not go to $120. If they close Strait of Hormuz tomorrow, from where you get 30 or 40% of global oil supply, then everything will collapse. I have no views. But let me come back to what I think will happen. Deflation had little to do with economics and more to do with government policy. Inflation has little to do with economics and more to do with the government policy. Government policy is inflationary. It's very simple. Now here Japan has two choices. Either Japan can go into deflationary depression from here, or they correct their mistakes by not allowing yen to appreciate too much, and we are on the same path on, inflating away the debt.
Right.
I also want to give you
Thank
one
you.
example, just to finish it off. I've been at one of the best risk manager. I worked at, at one of the best risk manager, not on the broking side, on the mutual fund side. Every time there was a small problem in the market, he would first sell his dealer to sell all the leverage stock of his HNI clients because he never took a loss. And he said to his dealers, sell what you can, not what you have to. So that bank does not lose money or the brokerage never loses money. This is what you've seen in the last 2 days.
Right. So Ritesh, one last question before we close for the day. So Kunal is asking, how does this affect the long gold trade?
Okay. So long gold trade, gold also got hit a little bit. Nothing. I'm not worried about gold at all. Actually, gold is turned out to be much better bet at this point of time. Why gold has gone from 2,500 to 2,440? It's a small example. Look, let's say you're having Bitcoin and gold. Bitcoin went from 60,000 to 50,000. It acted like a trash. Okay. You were having some gold in your account like every trader is having. So what do? Overnight, when US market has not opened, when the markets are illiquid, you go ahead and your broker goes ahead and sell it in overnight illiquid market, that gold also. There the bid offer is $3, $4 or $5. What do? You cannot do anything. Your broker is now holding. A lot of brokerage account today from Charles Schwab to others are not allowing you to log in today in globally. Why? Because they all make money, not from brokerage. They make money from making you leverage. And they are the ones who are cutting your leverage. So gold is also a leverage which is getting cut.
Great, sir. Really helpful in these uncertain times. And
but I'm not saying go ahead and buy tomorrow because we have we have a expiry this week, Tuesday, Wednesday. Market will take some time to settle because the VIX is very high. Okay, but I think the worst could be behind us by tomorrow.
Great. Thank you so much, Ritesh. And those who joined late can surely listen to the conversation on Ritesh's YouTube channel that goes by IGEN, if I'm not
So it is Pine Tree.
wrong. Right,
It is Pine Tree.
Okay, sorry.
Doesn't matter.
Okay,
I will post the link once it is there uploaded.
Yes, definitely our audience can connect with his Twitter handle so that they get the timely updates. So we'll be posting this if you join late, and otherwise it's available on Twitter. Thank you so much, Ritesh. Really helpful.
Thank you. Bye.